When it comes to understanding technical analysis, we discussed the concept of roof and floors, the concept of support and resistance. And we said that this top, whenever price is, anywhere you see price right now, anywhere you currently open a chart and you see candlesticks that are like this, you see candlesticks that are like this, right? So anytime you see price like this, anywhere you see at that time where price is, that is what you want to measure your support and resistance as a relative to. See? So if price is a place above like this, is on top like this, is somewhere like this, it means that your support is going to be below somewhere. Your support is always below where price is. Your support is always below, your floor is always below where price currently is. Always think of it in terms of like you sitting in a room right now. Where are you? Where is your floor? Your floor is under you, is where you are put, is where your leg is at. Your floor is where your leg is at right now, right? So your floor is where your feet is standing right now, where you are put. Okay, I'm sorry about that. That was network issues. So now, wherever you are right now on the chart, so you want to think of it in terms of where you are sitting down. If you're sitting down right now, your feet is on the ground. So you always have to think about it. And then that's the ground there is your floor, is a floor, and that's where you're currently sitting, right? So always think of price as a relative support and resistance relative to where price is currently. Okay, so when you come into the market right now, you see the current price in the market, the current price. Anything below that is where you're going to be looking for support. Below that, anything below that is where you're going to be looking for support. Just like if I ask you now, where is your floor? Where is your floor? You are going to point down. You're going to say, oh, my floor is where I'm standing, is where I'm sitting, right? But think about it. If you're in a story building, please mute yourself. If you're in a story building, your floor is somebody's roof. If you're in a story building, like multi-story building, your floor is somebody's roof. Okay, so that's the way you think about it. You think of it with respect to support and resistance, with respect to where you are right now. Think of it like illustrating it like that, and then also think of it where price currently is. So when price currently is right now, below that, when you are looking for support, you look for support to the bottom of where price is currently, to below where price currently is. Then when you're looking for resistance or a roof, you are looking at a roof above where price currently is. That's what you're looking for. Okay, so that you don't get this confused about where do I find support, where do I find resistance? You find resistance above where price currently is, right? So you're going to, and it's not in a specific place above where price currently is, but that is where you will find the resistance for your current chart. We'll go into how to do that, right? But then when it comes to where price is, you want to look for support, you look below. Support is always below where price is, just like floor is below where you are. Resistance and roof is always above where price currently is, just like a roof is above you when you are sitting or standing, right? So that's what you have to understand. So before we proceed this morning, we're going to talk about what we call swing. Okay. Now let me quickly do this. I want to add this. I think I have this there. Okay. Okay, so pardon me as I try to maneuver this, put it on the screen for you to understand this, right? Okay, so look at the screen right now. We talked about roofs yesterday. We talked about floors. Roof is resistance, floor is support. Then today we're talking about swing highs and swing lows. Now, all of these things are very important for you understanding what we are going to do after. All of these things are very important to understanding what you are going to do after. So in forex trading, so you take note of this, you might have to write it down or something, but you have to understand it. In forex trading, a swing refers to a price movement that occurs within a larger trend. Okay, so that's another term right there, larger trend. That's something we're going to discuss too. So if in forex trading, a swing refers to a price movement that occurs within a larger trend, it represents the oscillation or fluctuation of prices as they move up and down between specific support and resistance levels, right? So as price moves up and down, just like you are talking about, well, just like this, right? You see this movement going up, down, that is what you call a swing. This upward movement, up, down, here is what you call a swing. That's what this is explaining to us now. So traders who engage in swing trading able to capture this price movement on a shorter time frame, right? So this is what a swing is. Anywhere you see price moving up, down, all of that is what you call a swings. So now when talking about swings, there's what we call swing highs and swing lows. So first of all, we're establishing now that swings are these oscillations, these up and down movements, up and down oscillations. That's what we call swings, right? Then the next thing we want to talk about is what are swing highs and swing lows. Swing highs and swing lows. Now, when we've gone through this, we'll go to the chart and look at what we are saying, because we are just explaining what we are going to see on the chart already, right? We're going to see all these things on the chart. So this is to help us understand the concepts that we're going to be going through on the chart, right? So now when you look at this movement right now, you look at this up down movement now. The tops here, you see the tops here, where price gets to resistance and pull back, where price gets to the roofs and pull back, those are the points that are called swing highs. So let me extend this so that we can see what I'm saying. So it's something like this, right? Okay, so this right here is a swing high. This is a swing low. We've already established that this upward, downward, up and down movement are called swings. They are called swings. So these up and down movement are called swings, right? So, but the tops here, where price reverses when it gets to a resistance or a roof, is what we call swing highs. Swing high. Okay, let's put it there. Let's edit this and call it swing high. Swing high. Okay, so that's what we call a swing high. So this is what we call a swing low. A swing low. So swing highs and swing lows is what you are looking for in the chart. First of all, you come into the chart, you are looking for swings. Try to identify swings. When you start to identify swings first, where you have seen the swing moving up and down, you try to make sense of the swing first. Then you now identify the swing highs and swing lows. Now, the swing highs and swing lows is where you are able to draw your support and resistance, because this thing you are seeing here, this support and resistance right here that we have on the chart, you are the one, most of the time, you are the ones that will identify them by yourself. There are times where you might have some softwares that can help you draw it on the chart, but those softwares are usually not very accurate. They are usually not very accurate. So since they are not very accurate, it's always better to learn and to practice how to do this yourself. Now, it's not complicated to do. It's very simple to do, right? It's very simple. It's just practice. It's always practice. I've said it before. Now, when I take classes, I always tell people that when it comes to trading, trading is 10, 20%, let's say 20% learning, knowledge gathering, and everything. You learning, 80% is practice, 20% is learning, 80% is practice. That is what it is. In fact, probably more than 80% is practice. So when you practice something, you become something. You can practice one thing in the market, you get to know it so well. You come to know it so well that it will look as if you are an expert. And the thing is that it's not because you are more knowledgeable than somebody else. It's just that you have practiced better than someone else. It's just like when you are a software engineer or a software developer, and then initially when you, first of all, you are in a class and you have other people in the same class, by the time the class starts, by the time you first of all start going through these concepts and all of these things that you need to learn as a software person, they will look strange to everybody at the same time at the beginning. But later on, you will find that some people will now take it to the next level. After they've gone through the class, they will practice until they start writing codes that can do all kinds of things. It is just experience. It is just knowledge. It is not really knowledge, it's experience. It is practice and practice and practice and practice. Some people have gone on to even develop further codes, further programming languages for computers. And they just started out one day like everybody else, right? So that's the same way it is in trading. When you see people who are developing strategy and telling you buy here, do this, do that, it just took them time to practice. That's all, practice. So when you come to the chart, first of all, you want to look at the whole swings. Where are the swings in this market right now? Where are the swings? Where are the swings right now? Then you identify the recent swing high and swing low. So you see swing high and swing low now, right? This is a swing high, this is a swing low, this is a swing high, this is a swing low. Okay, so let's do this now. So this is a swing high. This is also a swing low. So we have one swing high here, we have one swing low here, we have one swing high here, so we have one swing high here, swing low, swing high, swing low, right? Fine, fine. So now the question is this. Many times when you want to trade, you are going to use the most recent swing highs and swing lows for your current trade. So while you're identifying all these swing highs and swing lows from the past, which is all very relevant, which is all important, but when you want to enter a trade right now, and you are in the market right now, the swing highs and swing lows that were formed last month may not be relevant to you to enter your trade now. So you want to go and look for what we call this recent highs and recent lows. The recent high and recent low. So, and it's still basically swings. It swings, but this time you are looking for the most recent one. The most recent one. So let's look at this now. So you will see a swing high here, we see a swing low here, we see a swing high here, a swing low here. Now, the one that is most recent, now watch this. This is also another swing right here. This is also another swing right here. So let's say price starts coming down here like this. This is another swing high right here. That's another swing high. Okay. So now, what is the most recent swing highs and swing lows? This is, you ignore these ones and look for the most recent one. This is the most recent one. This one now, this and this are the most recent swing high and swing lows. They are the ones that can tell you what is going to happen next in the market. They are the ones that are going to tell you what is going to happen next in the market. So is it price going to start coming down? Is because of this swing high and swing low. If price is going to come like this, if price is going to do this, if price is going to do this, come to this area now, and then continue upwards like this, all that is dependent on the current swing high and swing low. So while you are able to identify the swing highs and swing lows, you want to be able to also pay attention to the most recent one. What is the most recent one? What is the most recent high and swing high and swing low? What is the most recent one? That most recent one is what will help your trading the most for the moment. All of them are important. Don't get me wrong. All of them are important. But the one that you might need for your trading at that moment is the recent one, the most recent one. You see? So you are going to pay attention to the most recent swing high and swing lows. Okay. So now let's look into the market. Let's see if we can identify swings in this market. Let's see if we can identify, because like I said, you are going to draw this resistance and support by yourself, this roof and floor in the market by yourself. Yes, because the one that you draw by yourself is going to be the most accurate. As we go on, there's a tool I'm going to show you guys how to use. That tool will help you draw it better. That tool will help you draw it better. But then if you are using that tool without understanding this thing, you will not know what's going on. And you will not know when the market is misleading for you. The market can be misleading sometimes. It can be telling you that it wants to buy, meanwhile it's not buying. It can be telling you it wants to sell, meanwhile it's not selling. You see? So that is where you will need to know you have to understand this yourself first. So when you now use that tool, it's going to be much better. That tool is something I'm going to introduce to you much later, so that because if I introduce you now, you won't be able to use it and understand it now. But you have to understand these concepts first. Begin to practice with this and understand how to do this first before we introduce that one. When we introduce that one, you'll be able to use that one to put everything together and understand this whole process better. Right? So now let's go into the market now to see whether we can identify any swings. Any swings? Are there swings that we can see now? Are there swings that we can see? Let's see if there are swings that we can see. Let's go to another chart now. Let's see. Can we see any swings? Okay. So let's start from, where do we start from now? Let's start from somewhere. Okay. So look at this now. Look at this. Look at this bottom. Let's start from this place. So this right now, you see, if you draw a line to that top here, that's a swing. That right there is a swing. Okay. That right there is a swing. This is a swing. We've said that this upward movement and downward movement, up and down movement, is what we call swing, right? So this is a swing too. So you just look at where price went to and then came down. That's a swing. All this up down movement of chart, up down movement of price is what we call swing, up down movement. So you want to identify swings first. Swings. Very important for you to identify swings. Okay. So this is a swing again. All of these now are swings. Swing. Okay. All these are swings. You see, so what am I drawing? I'm drawing all these up and down movements. That is what we call swing. Look at this now from here. Sorry. Look at this now from this top now to this bottom here is a swing. Then this one from this bottom here all the way here to this, that's a swing again. Then all the way here from this point to this bottom here is a swing. Okay. Like that. So you draw all these things like that. That's a swing. So you draw all this like this. Now you don't have to draw. I'm just drawing all of this now back behind, just going behind to draw this is to help you understand what I'm saying. Okay, when you want to draw your current, when you want to draw the charts right now, you don't need to be drawing, go so far. For example, you look at this date now. This date is April 23rd. Look at the date under here. Under here, Sunday, April 23rd. That's very far behind. When you are looking to draw your swing high and swing lows, you don't go that far. You know, you don't go that far. You just look for the ones that are closest at this time, right? So in this case now, you are looking at this from this top, from this bottom to this top now is another swing. From this top now to this place now is a swing. See? From this bottom here now to this area here is a swing. The swing. So from here now to this bottom now is a swing. See? So from here now to this top right here is a swing. Is a swing. So when we look at this, let's spread this out and look at it carefully. So you see the swings I've drawn now. The swings I've drawn now. Then look at this. From here now, it came down to this place before going up again. Okay, so the most recent, this night, right now, this here, this is a swing. This is a swing high, this is a swing low. Always look at it like that. Whatever price is, at that point, you have a swing high, you have a swing low. Okay, this is a swing low. This one is a swing high. This is a swing low. Okay. So swing high, swing low, swing high, swing low, swing high, swing low, swing high, swing high, swing low. Now we are looking at this in hindsight. We are looking at this as something that has already passed. Okay. Like we said before, whenever you come to the chart, you want to be able to look into the chart and see how you can use the data from the past to understand what is happening in the market right now. How can I use the data from the past to understand what the market is doing currently? That's all you want to do. How can I use the data from the past to understand what the market is currently doing? That is what you are looking for. See, and all of these things we are beginning to talk about is what we are talking about by, it's basically using the data that we have already, this movement in the chart, this upward downward movement in the chart, to understand what the market is doing so that we'll be able to enter trades going forward, right? So now let's look at this. So as we begin to look at that, then we start to then join these areas together. We'll start to join them together using like a box. Look at this now. We see this area now. Then we start to, all these areas that we marked, all these areas that we marked now, this swing high, swing low, all this, let's look at these tops now, the one that we marked out this top. We start to join them using like a box like this. Okay, we start to join them. You notice that they are all in different, they are all in the same region. You see this one, look at this area now, look at this swing high. Look at this swing high. Look at this swing high. This swing high, right? This swing high, this swing high. They are all in the same area. They are all in the same area. So now, what that is telling you is that you are able to join swing highs together. You are able also to join swing lows together. So let's look at this. Let's look at this bottom now. Here now we still have swing. We have a swing. We have swings here too. Let's draw some of them here. So that's a swing again. This is a swing again. So like I said before this started, it's not complicated. It's just practice. It's just practice. I have taught I've taught this to people who are in secondary school, and they understood it and started using it to make money. Of course, those are advanced too, but then what I'm trying to say is that it's not complicated. Okay, so look at it now. What we want to do now is we want to join also these bottoms now. This area now, we join them together. What is showing us is that you can see that there is a connection when you draw when you draw swings. At a point, you start seeing that a whole region will have a connection. There'll be a connection of a whole region. When I say a region, look at this now. This whole place now, look at this. This right here now, look at this. Look at this whole place now. It's not perfect. It's not like a straight line. It's not a straight line. Some will come into that same region. Look at the region I'm talking about now is this blue region. This blue region is what I'm talking about now. So some price will come inside it. It will go back. Some will come inside it. It will go back, come inside it. It keeps going up and down, but all of them are captured within that region. The same thing for this stock here. All of them are captured within that region. So this area now will form what we call a support, a floor. This area now on top will form what we call a roof, which is a resistance. So this is how we identify resistance and support on the chart. Resistance and support. So we start by understanding the swings. Where is the swing happening? And then inside what I've drawn now is a big region, it's a big area. But if you also look at this, if you look at this, you will also notice that inside here now, you see inside here now, there are also swings here. There's a swing here, there's a swing here. That's another support. That's another support, right? There's the major one, there's always the big one, and there's the smaller one. The big one, the smaller one, you say which one is more important? They are all equally important. Because you can use the smaller one. If you are the biggest one, these big ones are used for people that are trading very long-term trading. They enter a trade that is running for 3 days, 4 days, 5 days, 1 week. They are the ones that use the big trends. They are the ones that use the big swings. They use the big swings, the bigger swings. But if you are somebody who is not trading for a long time, your trading is not long-term, if your trading is not long term, then you are not looking to use you are not looking for the larger swings like this. This is a very large swing. We are on right now. Look at this time frame. Look at this time frame that we are, right? So every candlestick we have here that is green or red are formed within a particular time frame, and we are on 4 hour. 4 hour means that every candle you're seeing here right now, every candle was formed in the space of 4 hours. So that tells you that this is the time frame we are seeing here totally is very large. The time frame we are seeing here is totally very large. So what that means is that you are going to now focus more on the smaller time frames, like 1 hour. You know, when you are doing this on the 1 hour now, you discover that it is much smaller. But then the beauty of doing it on like a 4 hour chart like this is that your tendency, it's easier and better to make money doing this on this larger time frame than for you to do it on a lower time frame. Here's what I mean. Remember I said yesterday that if price does not, what price does is when price gets to a resistance, it will fall. When price gets to a support, it will rise, right? When price gets to a resistance, it falls, it will sell. That's what I mean by fall. When price gets to a resistance, it sells. When price gets to a support, it buys, all right? But we also said that support and resistance can be broken. That support and resistance can be broken. When it's broken, if a resistance gets broken, price continues to go up. If a resistance gets broken, price continues to go up. If a support gets broken, price continues to come down, just like in this case. So support was broken, price continues down, keeps coming down, right? It comes to another support again. In this case, look at resistance. Resistance is broken, price continues upwards again. You see this? So now the thing is that when you come to the main chart and you are looking for support and resistance where you can trade, and remember, if you enter a resistance, if you enter trade on a resistance, you are expecting price to come down because it's a roof. If you throw a ball to the top of your roof, what happens? It bounces down. So when your price gets to a resistance, you are expecting it to fall. So you want to place a sell on a resistance. But the point is that since that resistance can also be broken, you need to understand strong resistance. How do you identify strong resistance? When you want to understand, identify strong resistance and strong support, you do it on a higher time frame, like 4 hour or like 4 hour. 4 hour H1. This is 1H. Is a good one. That's 1 hour. All the candles are formed in 1 hour. That one is good too. But the better one is to use the 4 hour chart. When you use the 4 hour chart, it is better than using the 1 hour chart in terms of support and resistance. The truth is that you can trade on any time frame. You can trade on 30-minute time frame, 15-minute time frame. You can trade on any time frame. It's not a problem. But the ones that have the possibility of stronger resistance and support is usually the higher time frame, like the 4 hour. Okay, so now let's look at this. When we identify a swing like this is a swing right now. This right here is a swing. Okay, now we cannot join that swing yet. We cannot join that swing yet because there is no other swing on top here. Remember, for us to draw support and resistance, we need to see two swings. We need to see this now. Look at this. So we need to see this, we need to see this, we need to see this. If we see like two areas, we see this one and this one, we can then draw a resistance and extend it. So imagine now, when you look at this, these two happened first, way before this one happened. So if we drew these two now and we extended it, you notice that when price got to this area, it started to sell. It started to sell. Even when you could have just entered the market here and just mark these two, set it and say, okay, anytime price gets to this place, it will enter sell and I will make money from that. You can do it. And it happened. See how price started coming down, right? So fine. The question now is that how do you know before price gets to a point? So now we have this one here. We have this swing right here, right? And then right now we don't have another swing for us to join them together. So what we do is this. We take the only swing that we have. The only swing that we have, we put like a box there. We put like a box there. Now, the reason why we are using box and not single lines is because support and resistance areas, they are not single lines. They are like box too. They are boxes because price can hover inside it. So we know now that, for example, price can get to this place now, this area now, and start selling. So this is what we are going to do. All of us on this call right now, we are going to get our charts. We are going to get our phone. We are going to get our phone. We are going to enter a trade for a sell here. We'll enter on our demo account because we want to practice what we are learning. So what we want to do now is that we can see that there's a swing high here. We are expecting price to come down from here. But remember, there are two possible outcomes. It is either that price will come down from here or that price will break out of this point. But then that is the reason why we use what we call risk management. If we enter here, nobody knows this market for sure and tell you that this is what is going to happen guaranteed. If somebody, that's why when you are dealing with any trading organization and they tell you guarantee, they are using words like guarantee, guarantee, guarantee. Investments don't have guarantee, right? That's how it is because there are uncertainties in the market. So what you need is high probability. We call it high probability, not guarantee. So if I tell you now, enter a trade at this point for a sell, enter a trade at this point for a sell, I'm not giving you a guarantee. I'm just doing analysis of the market and I'm saying that based on what I see, based on what I understand, price is likely going to reverse from here. Okay, so what we are going to do now, I'm going to set a trade for you now on this place. You are going to place it as a pending order. Remember, price has not reached there. We want to enter a sell. We are going to enter a trade here for a sell. And that trade, we are going to have a stop loss and a take profit. We will have a stop loss and take profit on that trade. We will either hit take profit or we hit stop loss on that trade. But if our trade doesn't go well, we will enter another one. In this case, we know that the only way our trade will not go well here is if this place is broken. Because what we want to do now is we want to enter a sell around here. This line now, we want to enter a sell trade around here. The only way this trade will not go well is if price breaks out of this place. If price breaks out, we will set a stop loss so that our stop loss will close. When we close, we'll go away. Then we now know that, oh, price has broken. Oh, we will now come and enter buy trade on top of this place. That's what we're going to do. We'll now come and enter another buy trade on top of this place. That's what we're going to do now, right? So price is going there. Price is going there. I wanted us to use pending order, like sell limit, because we want to sell here. But since we are not selling, since price is almost there, let's watch it. Let's watch it. We will enter a sell. Once price gets to this white line, we will enter a sell trade. Let's open our demo account now. We are learning on this, right? So price is going there now. It's getting close. When we get there, we will enter for a sell trade. We'll enter a sell trade. We will then set our stop loss and take profit. So let me measure for us now where our stop loss and take profit is going to be. Okay, so this is how trading is done okay, so this is what we're going to do now. Okay, so this is what we're going to do. When we get to this trade, right now, let's even set it, right? We can set a pending order right now. Our stop loss is 12 pips. Our take profit is 25 pips. Okay, so let me show us how to set it now. If you're on this call right now, set this trade. Set this trade right now. See where the entry price is. The entry price is 0.6706. That's the entry price. Do I need to post this somewhere so that you can see it? So we have an entry price. Me, I want to enter the trade as well. But we are testing this. We are just taking a demo account. I want to use to explain and understand certain things, right? So let's look for AUD USD. We're on AUD USD right now. AUD USD. Let's look for AUD USD. So when AUD USD is what we are doing. Entry price is 0.67060. 0.67060. That's our entry price. So let's enter the trade now with 0.01. 0.01. We'll set a sell limit on this trade, sell limit, because price has not reached there. I thought we'll wait for price to get there, then we enter, but we can just set it and wait. Instead of us to wait for price to get there, we might still be talking and then we'll miss it. But let's set a sell limit. Excuse me. Let's set a sell limit now. So sell limit. Sell limit, right? So when you get a sell limit, where it says price, where it says price, put this price, entry price here on the screen, 0.67060. 0.67060. 0.67060. Okay, when it talks to stop loss, look at stop loss here. Stop loss is 0.67180. Stop loss 0.67180. 0.67180. That is the stop loss. Then take profit is 0.66808. 0.66808. 0.66808. Okay, so this is what you are going to do. I will take a screenshot now and put it in the group for us to understand what we are doing. This is okay. No, this is AUD/USD is what we are looking for. Please look for AUD/USD. I was mistakenly using Euro/USD. AUD/USD. Okay, AUD/USD is what we are talking about now. Okay, I'm sure we know how to get there. AUD/USD is what we are targeting now. We'll enter the trade for, I'll take a screenshot. You will look at my screen right now. Sell limit. Okay, sell limit price is 0.6767060. Okay, stop loss is 0.67180. Then take profit is 0.66808. Okay, so I'll take a screenshot and send it to the group now so that those who have not gotten it will get it. Okay.
Are we buying or selling?
It's a sell limit. Sell limit. I'll post it to the group now. So AUD. Look at it now. AUD sell limit is in the group right now. AUD/USD sell limit. The price is 0.67060. We have a stop loss 0.67180, take profit 0.66808. So that is the analysis we did here now. The thing is that if this trade doesn't go again, if this trade goes against us, we already know we will lose 12 pips. So it's not a problem. But then after that, if that were to happen, we will then enter for a buy after that. So but once it goes our way, we will enter our profit. So price is getting very close to that point now. We want to enter a trade there and we want to watch it. Okay. So that's important for us to do. This is how you look into the market to see, oh, what's likely to happen, what's happening in the market, what's likely to happen, right? So that's what we are looking at there. We'll keep our eyes on that. We'll keep our eyes on that, right? So we've said that. So this is how you are looking for. The reason I wanted us to take this now is because we are looking at this right now as it's happening. We want to be able to use it to understand what is going on in the market. We know now from the market, from analysis, that price can reverse around here. This is right now, this is a swing. We've seen a swing here. This is a swing. This is a swing. So, and we marked that place. So we are expecting price to respect this swing now and start coming down from there. That's what we're expecting. We're expecting price to respect this swing and start coming down from there. That's what we're expecting to happen, right? So let's watch that and see if that happens. So if that happens, then of course, this trade, we have gotten a profit on that one. If that doesn't happen and it breaks out, that means that, okay, that means that is a breakout. That breakout we talked about before. That's what we mean. So what is going to happen then? What is going to happen then is this. If this trade doesn't go well and we enter the trade and it doesn't go well and it hits our stop loss, we will be looking for a place to enter this trade again. And then we will now make profit that is at least 2 times the loss we made. That's how we're going to do it. If we lose 12 pips on this.
What time frame are we using?
We're using 4 hours on this one right now.
Okay.
We're using 4-hour time frame. So if this trade doesn't go well, what we'll now do is that we will enter another trade that is going to be a buy trade. And our goal on that trade will be to take 2 times, twice the profit, twice the loss we made on that trade. So this is what we call risk to reward ratio. If you make a trade and the trade is not a winning trade, when you enter the next trade, let your trades, your targets profit be 2 times, 3 times your risk. So when that happens, you will discover that overall you are able to win the market. Overall, you are able to win the market, right? So that's what we're waiting for on this one right now. So we'll just set that one and keep our eyes on it and keep watching, right? So this is what we want to do. This is how we want to understand the chart. So we have an assignment on this class right now. We have an assignment on this class right now, and that assignment is this. Let's all take our charts, whether you have it on your laptop or you have it on your phone. Let's take our chart and begin to find swings. These swings, we've said that swings are what? Swings are this movement, this up and down movement in the market. Sorry. This up and down movements in the market is what we call swings. First and foremost, you want to identify swings. When you have identified swing, you cannot get support and resistance. You can't understand support and resistance if you don't know swings, if you are not able to understand swings and be able to identify swings on the chart. So let us identify swings on the chart. You can send the screenshot into the group there. You can send the screenshot to me, right? Mostly, if you are sending me a message, please send it on WhatsApp. Okay, you can also send it to Telegram, right? I'll check whichever one it's whatever one is easier. You can send there, right? So identify swings, please. Identify swings. This is the way to learn. Like I said, 80% is practice. So please take your phone after this class, or maybe when you have time later in the day, begin to identify swings on your chart. Be it on your phone, be it on your computer, just start going through the way I'm doing it, the way I was doing it. Try to identify swings. You can use the 4-hour chart, you can use the 1-hour chart. Identify swings first and foremost. When you start identifying swings, after you have done it, do it for like different currencies. Maybe do it like 3 different currencies, 4 different currencies. Just identify swings. And then when you identify swings, begin to try to join them together using horizontal lines. Begin to try to join them together using horizontal lines, right? So there's something else I would have shown you guys on how to use MT4, these horizontal lines and all of these things on MT4. I don't know if I can do that now. Let's see. So I want to try to do something right now. For some people, they're going to be like, okay, if I'm on my phone, how do I know horizontal line? How do I know vertical line and all that? So I want to show you guys something right now. I want to switch my screen to my phone. I want to switch my screen to my phone so that I can show you guys how to use your MetaTrader. How to use your MetaTrader. Okay, so let's do that now. So this is my screen right now. This is MetaTrader. That's that trade I placed just now. That's what's still showing here. So this is an account that I'm using for that particular trade that we took that time. Okay, that's the AUD USD. So now look at this trade now. Look at this MetaTrader. This is your MetaTrader platform now, right? If you want to use horizontal lines, you want to use all those lines we have on the chart, you want to use them, you have to be able to know how to get them, because I know that some people are going to have the question of how do I use these horizontal lines? How do I use vertical lines? How do I use all those things? Like the drawing I was doing on the laptop, that was on the laptop before. But let's see, let me try and draw some things for you now on this chart. So when you tap on your screen, when you come to MetaTrader and you tap on your screen, when you tap on your screen like this, you see certain things on this. It looks as if there's a, like a circle. It drops on your screen. So what you're looking for now is this. You see this thing on your screen that looks like that looks like the head of somebody or something like that, and then with triangles beside it. That's what you pick. When you pick that, then you come here, you come to this place. You come to this place, and then to the top of the screen right there, you see many things. You see a horizontal line. You see like a box that looks like a triangle. You see a vertical line. You see a diagonal line. That diagonal line is what we call a trend line. That diagonal line is what we call a trend line, right? So that trend line is what you use for drawing anything you want to draw on the screen. Like if you are identifying those swings we're talking about, now, that's the is that diagonal line that you are going to use to do it. So what you do now is that you come to this place, okay? So you tap on that diagonal line and it's on the screen. You can see it on top there. You can then draw it on the screen like this. You can see this. You can draw it anywhere you want to draw it. Then once you have that one on the screen, you can then go ahead and take another one by doing the same thing that we said before. You go again, you go to that point, you pick another one. So you pick another one again, right? So if you want to draw like a box, like you want to join diagonal lines together, you can use that box. You can see the box now. Once you draw it on your screen, it will form a box for you. Once you draw it on the screen, it will form a box for you. Can you see that now? So this is how you use your maneuver, manipulate the chart. You come there. Also, if you use horizontal, if you are looking for a horizontal line, you pick that, you put it on the screen. Once you hit the screen, what happens? A horizontal line appears. A horizontal line appears. And then this horizontal line, you can drag it to anywhere you want to drag it to on the screen. You can drag it to anywhere you want to drag it to, and you put it there. All you need to do is make sure it's highlighted. And what do I mean by highlighted? You notice that this horizontal line right now, it has two, in fact, the diagonal line that is on the screen, the white diagonal line that is on the screen right now, right? You will see that it has three balls, three balls on 3 points. You see, there's one on the bottom, there's one in the middle, there's one on the top. That shows you that it's highlighted. Okay, if you tap on it, it goes away. That means the highlight is disappeared. If you tap on it again, it has appeared again. It is only when it is highlighted like this that you can use it, that you can move it around. If it's not highlighted, you can't move it around. The same thing with the box, the red box that I drew on the screen now. You will notice that there are three white dots on it. Since there are 3 white dots on it, I can move it from place to place. Can you see? I can move it from place to place. Because it's highlighted. Once it's highlighted, you can edit it. Just like on your normal stuff, if it's highlighted, you can copy. If something is not highlighted, you can't copy it now. So now it is highlighted, you can copy it. The same thing here with this one. If it's highlighted, you can delete it, you can edit it, you can move it around and all that. Then also for the horizontal line, you will see that there is a small box, or this small white box too. You have one on the right hand side and one on the left for the horizontal line, this horizontal line, right? For the horizontal line, you see that there's 2 white boxes beside it. When you click on this one, it disappears. The horizontal, the 2 boxes have disappeared right now. When I tap on it again, it appears. You see, it has appeared there now. So with that, I can move it up and down. I can move it up and down everywhere, and I can delete it too. If I want to delete it, remove it from the screen, all I need to do is just hold it down. When you know the way you do your phone, you do text on your phone, where you can, when you highlight something, you can then delete it. This one, you just hold it down. You hold it like this. Once you highlight it first, it's highlighted. Then you hold it down. You will see on the top of the screen, it's asking you, do you want to edit? That one that looks like a pen is edit. The one that looks like a delete box, that's delete. So I can delete it now and say, okay, I've deleted it. It's gone from my screen. Can you see? It's gone. Now, if I want to add it again, I tap on my screen again. Okay. I go to this stuff that looks like a circle. It looks like a circle. It looks like a triangle and all that. I tap on it. When I tap on it, I put another horizontal line. Look, another horizontal line there. Horizontal is the first one now. It changes, position changes. So I tap on that one. I put it on my screen. Then I can then shift it to anywhere I want it to be. So this is how you can manipulate the chart for yourself. On your phone. You can do this on your phone. You can also, it's the same thing for laptop, but I know that many people are used to phone or many people have phones. Okay. So this is what you can do for your phone as well, right? You can do this for your phone so that you can move around, manipulate the charts and be able to understand the thing. So, and also when you scroll to the left like this, when you scroll to the right, your chart moves around. So right now I can decide that, okay, I want to draw a swing here. Let me show you where I want to draw my swing now. Okay. So I want to draw swing. So I move this thing. I move my line. I make sure I highlight it. I move it. I move it now to this point. So I want to draw my swing here. Let's say from this top now to this bottom. I want to draw my swing here. That's what I've drawn now. See, I've drawn one swing there now. Even though when I look at this, I can actually draw more than one swing here, actually. I can draw one here like this, right? I can draw one here like this. Then I take another one. Fortunately, it always goes back. So you always have to find a way to navigate your way, you know? So you can always turn it up and down and put it where you want to put it. Okay. So now what do I do again? I want to add another one. I go again. You have to do this all the time. You know, like I said, this is just practice. When you do it for long enough, it's not a problem anymore. It doesn't look as if you are doing something serious. Okay, so we'll put this here. That's another one right there. So we can then, I want to draw yet another one. Okay. So this time I want to draw it like this. Okay. So now I've drawn one swing here, another one swing, 2, 3, 4. I've drawn 4 swings here right now. Now let me now join this bottom here and create like a horizontal line to put them together, right? So you can spread out this horizontal line as well. Okay. I folded it together. It's becoming difficult to spread out. Okay, if it's finding it difficult to use it, just delete it and get another one. As simple as that. Okay. So if we put this here now, you can see we have formed a support around this point now. We formed a support around this point by just joining these 2 areas now. These 2 areas is where we have joined. These 2 swing lows now. These 2 swing lows, we have joined them together now. And now we have a support there. So we can now see why price reversed from there and started going up from there. You see? So this is how you need to, this is the practice you have to do. That's why I'm taking my time to do this so that you can go back and practice this and be able to understand it. And because this is about practice, when you practice it, you understand it as well, right? So I think we'll put we'll end the class here right now. Then I'll give further updates in the group. On this trade, we'll also update in the group as well concerning this trade, because I want us to understand how these trades are done. And if you get a losing trade, you got a losing trade because of the way the market went, right? But then if you have a losing trade, the market also gives another opportunity to enter another one. So that's what we are doing. That's the idea. So if you lose $1 on a trade, the goal is to get another trade. Even if you lose another $1 on a trade, By the time you take 2 winning trades and you make $2, you've already recovered the loss you made on that one, and you're in profit. That's the way trading is done. That's the way trading is done. Trading is not perfect. Like, okay, I'm guaranteed every trade I enter must be profitable for me to make money. It's not, doesn't work that way. Okay, but then you also need to use risk management. When I say 0.01, please use 0.01 because you're still trying to understand this whole thing. When you've understood it and gotten it properly, then of course you can then know the risk involved in increasing your lot size. You can make more money when you increase your lot size, but you have to understand the risk before you do it, so that you're not wondering what's happening if a trade doesn't go your way, right? So I'll end the class right here around